Friends, greetings to everyone. This is Dmitry Abramenko and the review of metals, probably the most anticipated video among all the annual forecasts that I will be making for 2026. And in fact, in this video, I want to cover the 4 main metals. These are silver, gold, palladium, platinum, and my long-term expectations, so that you can monitor and shape your trading plan month by month this year. So, the year 25 was significant not only for the commodity market, but also became our shared victory exactly 1 year ago. Or to be more precise, back in 23, I started talking about the colossal growth awaiting us in metals. And I constantly updated these forecasts. Last year, we announced specific levels and managed to earn quite well on this together with our clients. Therefore, I can say that the forecast worked out completely, and our task today is to update our plans and answer the main question. How long will this growth continue? How long can we hold our positions? At what stage are we right now? In this video, I want to focus on the global layout because I'll be sharing the local one with potential ideas in my Telegram channel. Accordingly, we'll divide this part. Here you can see the global prices and targets that I foresee for 2026. As a result, gold. The previous upward trend in gold remains intact. The main part of Wave 3, the fastest and most dynamic, has already played out. If you didn't make money on that, you missed out. Of the significant moves left, only the final rise remains. This is Wave 5 within the larger Wave 3, and at the moment we're focusing on the SL 162% level. Why only this way? Because we don't have a fourth wave correction to determine it more precisely or to build the pitchforks. Local ones. The boundary of the pitchfork gives us an understanding that the target zone for gold before a serious correction begins is at 5,368. It's important to understand a few key points about gold. The start of a decline, that is, the correction that many people are often afraid of. It won't be a reversal. It's an expected wave. Wave 4 within the current trend. If you find trades, you can stay in them. Why? Because after that, there will be a new high. And that's where, at the new extreme, it makes sense to lock in your positions. Before the correction begins, accordingly, this range could last a month, maybe even a bit less, possibly with aggressive trading on 15, 30 or 60-minute time frames to earn extra profit. Let's move on to silver, friends. Here, 2 markup options are presented. The silver markup looks a bit more complicated. There's a scenario for a potential extension, the red one, and the classic blue one. At the moment, the most likely scenario is still the red one, meaning the presence of an extension, which is also confirmed by the ratio charts. The gold to silver ratio shows very big prospects for silver, so it's possible that the plan and target shown here on the chart may actually be even lower than what will happen in reality. We'll see. However, it's important to take into account the risk of the blue scenario itself, which means there's no point in trying to sit out the corrective movement in silver. This asset requires more attention, and trading should be careful and tactical. As a reference for the target level, in this case I am focusing on the ESL 200%, which corresponds to the 115% mark. Approximately 20 cents per ounce of pure silver. This is the exact level we use to track the movement and to plan all trades if we are aiming for the medium term. The next asset is palladium, and the picture is similar. In other words, we see a comparable impulse here, and unlike silver and gold, there is no extension here. Or at least for me, it's not planned. One scenario looking ahead is that instead of wave 3, at the moment within the channels we've seen wave 1 of a lower degree. And there is still an alternative scenario, though it's just a possibility, that in 2026 palladium could show much more significant growth than what is currently shown on the chart. That is, above 2,500, possibly up to 3,000, so basically a twofold increase. Accordingly, for now I am taking a conservative approach. Based on the classic growth model, I expect the final phase of the movement, that is, wave 5, and I calculate it as 162% of the size of the correction. It's also important to note that wave 4 has already reached its target in terms of depth, but in terms of duration, it does not correspond to or match the length of wave 2. Therefore, it's important to understand here that there may be another decline to the 1600 to 1700 range in order to complete this correction. Whether this will happen or not is unknown. This needs to be planned with the understanding that if you want to enter trades, it might make sense to take a partial position at the current market price, but with the awareness that your stop losses should be set at much lower levels. And the final asset is platinum, where similarly there is potential for an extension. This is not indicated here. We are considering the classic targets. We assume that just like with Palladium, wave 4 may have already formed, meaning that from here we are only looking at a move to update the maximum. And in fact, the target is calculated in the same way, 162% of the correction size, or the 2815 level. At the same time, it's important to emphasize that this is also not the end of the cycle, but after reaching the necessary targets and entering a correction, the correction will simply last longer in terms of time. And this probability, which exists given the correction, needs to be taken into account, especially if you suddenly feel overconfident and plan to hold your trades for too long. Why? The answer is on this slide. If you suddenly think that metals in 2026 should rise without stopping, that's a dangerous misconception. It's precisely such movements that most often lead to excessive volumes and consequently to risks and very large drawdowns on your deposit. I know quite a few cases in absolutely all markets where, as prices rise, the volume increases, creating a huge snowball that only needs a slight correction to unravel. And you end up wiping out all the profits you made on metals during 2025. That's why, unlike 2025, which developed within the framework of the third wave and was practically without corrections, or at the very least, it recovered very quickly, the correction we're expecting will be comparable in scale and duration to the correction at the end of 2024 and the beginning of 2025. In other words, there is a chance that an untimely exit from a position could result in having to endure drawdowns during a correction lasting 6 to 8 months, even if you rotate from one futures contract to another. So, to minimize your risks and adapt in time to a constantly changing situation, keep an eye on updates in the Telegram channel. And accordingly, I will be posting information there, including about metals. You can find the link below this video. Well, that's all from me for now, friends. Stay tuned for the next updates. This was Dimitri with you. Goodbye, everyone.